Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, this is Gary Wilson, and welcome to this week's Massive Passive Cash Flow podcast. We got a great guest today, Leonard Cabral, all the way from Hawaii, and I'll introduce Leonard in just a moment. In the meantime, though, if you haven't done so yet, please go ahead and subscribe to the podcast. It's on a number of different channels, including the big ones, Stitcher, iTunes, iHeartRadio, and also, the news keeps getting better on the global investor agent team that we created last year is now in 25 states, including Hawaii, by the way. And it's the fastest growing, it's the only national team, and it's the fastest growing team in general in the business. And the beautiful thing for you and I, because we're investors, is these agents are trained to work with us specifically. They're not traditional agents. They have the tools and the strategies to identify, analyze, and negotiate properties on and off market. This is a big deal. So if you haven't got one yet, go on to the realestatewithgarywilson.com website, click on members area, and log in if you're a member on the left. On the right, if you're not a member, you can still log in for free. And they let you play around in there like it's Christmas time for 30 days. Get all the books you can get, hundreds of recordings on anything related to real estate, and access to the global investor agents in your area. All right, it's a specialty group of people that we created just, quite frankly, out of my own experience from being an investor and looking for that special agent. Well, we have them for you. Anyway, so without further ado, Leonard Cabral, welcome aboard, brother. I'm glad to have you on.
Aloha, Gary. Welcome. Thank you.
Well, first off, I just want to say thank you because I know I got to meet you and speak with you a few times. I know how successful you are, and therefore I know you're a busy person. So that means we're lucky to have you. So we really appreciate it. And if you wouldn't mind, I love this kind of podcast because we do know each other, and just think of it as like a conversation. And if you're willing to share some details about yourself, that would, in fact, if you wouldn't mind, start off, give people some background, some context, about who you are and how you got to where you are, and then we can maybe go into some meat and potatoes. How's that sound?
Awesome. Sounds perfect.
Yeah.
So born and raised in Hawaii, and I've been in the insurance industry for 13 years now, and I like to call myself a serial entrepreneur because I'm always looking for new businesses to jump into and stuff. So when I first got into insurance, though, I did not want to be your typical life insurance agent that said, "Hey, Gary, how much death benefit do you want?" I mean, those are dime a dozen. They you throw a rock, you can hit 1,000 of them. And so I wanted to learn how to use life insurance as a tool, as a financial tool, and how to protect and grow wealth. And so that's what I went. That was a journey I jumped on, and it's a lot more fun to teach people to how to use insurance, because most people only know insurance as a death benefit, as a protection, and so they see it as cost. But if I can eliminate that cost factor and show you how to use it as a tool, a financial foundation, then it changes the whole ball game. It changes the mindset. And so that's really my objective when I talk to people is how do I change that mindset of seeing how do you view insurance?
Right. Well, I appreciate that. I know just based on my own experience way back in the 80s, I had my first whole life insurance policy. And it was probably because I knew people. I was already investing, and I knew people who were. And I by the way, I was just like 23, 25 years old, and but I knew people who were much more mature than me, and obviously further along in their business careers, and therefore were more affluent than I was at the time. And a lot of them had whole life policies, but these were the old style, traditional whole life. It's like the old saying, "This isn't your grandfather's car." Well, this was your grandfather's car.
Right, exactly.
I mean, the same policies they had for hundreds of years, but now it's a totally different world out there. And I'm just like blown away by all the things that are possible. So guys, I just want you to, for those of you listening, pay attention to what Leonard's going to tell you, because this is not your grandfather's whole life insurance policy. There's a whole new world out there, and it is so easy to have more control over your financial freedom, your financial independence, by utilizing these policies and all the features that are part of them. We use it in investing in real estate. And I could spend days going over all the benefits, but instead of me doing that, let's Lenny, if you wouldn't mind, kind of getting a little bit about the what, like how, say I'm an engineer, a teacher, a dentist, professional, or even a business owner. What are, say, three things that I really should know about today's policies? And they're really not whole life. They're universal life index, universal life. So we've probably got a lot of things that we can cover, but maybe like the three main things that would help people realize I need to look more into this,
So one is understanding how do you create arbitrage, right? So in insurance, a properly structured, properly funded policy allows you to use insurance as a storage unit. So I always talk about, if you have your money, most people, they put their money in a bank, and what does a bank do for you? Nothing. It pays you 0.25%, right? But if as an investor, the main thing that you want is access to your money, but you also want to have additional benefits to it. So, if we can show you a more efficient, better place to just store your money that allows you to create arbitrage, that gives you a death benefit, but also gives you this thing called living benefits that most people don't even understand. So the new policies that are coming out, majority of them include this thing called medical living benefits. And again, we're talking about, this is not our grandfather's type of insurance. Mm-hmm. When back in the day when I first got into this, living benefits was your cash value. No longer is that what we're talking about. So we have medical living benefits, which when you hear me speak, I always talk about safety nets. How do we create safety nets underneath you so that when life throws you that curveball, you got the protections in place, but at the same time, giving you access to your cash so that you can allow your money to grow in multiple places at the same time.
Yeah, and a perfect example of that is, and I'll just go back to real estate investing because that's what I know best is, typically you have to borrow money to buy and invest in real estate. You're going to go to a commercial bank or to traditional bank, get a conventional mortgage. We don't really recommend FHA mortgages for investing, although you can do that if you want to in the beginning. But what I'm getting at is you go to traditional banks, follow that old model, that old protocol, do an application, get approved. Everything gets recorded. It's like public information, and your credit, it affects your credit, all kinds of things, good and bad. Okay. And one of the benefits of borrowing from the cash value portion of your life insurance policy is you're not going to the banks. None of that occurs. It's like an internal, quiet transaction. And the good news is you even get to help determine the terms because you're paying yourself back. It's just, there's so many benefits here, and then it doesn't affect your credit. You can still go and borrow externally if you want to, but it puts you in control. And you become like your own banker, and that's just the beginning. There's way more than that. Leonard, any thoughts on that related to how so people who want to invest in real estate, they could probably invest in notes. They don't have to just buy a building. They can actually purchase a mortgage. But what are some of the things that I might not know, or questions I'm not asking, or statements I'm not making related to that? Because there's probably 5 other things I want to talk about, but I think if people understood that one component, they would pique their interest, and the other is just like even better,
Definitely. So yeah, you hit on a couple of them. One is control. We use the luck philosophy, which is liquidity, use, control, and knowledge. And so having that control is important because I always say no one's going to care more about your money than you. So why not go get the knowledge? And so you can make the best decisions for you and your family with your money, right? So control is everything, and so that's why I love empowering people and teaching people how to do these things, right? And then the other part is arbitrage. So this is another thing that you touched on is yes, although you have access to the money and you can borrow your money because you are always in first position, you always have first rights to this money. The beauty of it is when you structure these notes, you don't have to necessarily pay it back on a timely schedule like you would need to do with a commercial bank, right? And so let's just say you're in a deal and the deal takes a little longer than you expected it to take. Well, in a commercial situation, you're in a bind. Now you got to figure out how to come out of your own pocket to keep things afloat. Where in this scenario, you're protected because this is your money. So therefore, you don't necessarily have to pay it back when you initially agree to. You can make revisions and allow yourself that freedom, that time freedom to say, hey, you know what, I'm going to pay this back 60 days late. And there's no penalty to it. And that's the beauty of this whole thing. And so when you have it, you hear me say this quite often today, is always having a properly structured, properly funded life insurance policy. Because here's the thing is, you have a million life insurance agents out there, and they're all going to say, oh yes, I understand what he's doing. Oh yes, I can do it. But if it's not structured properly, and if it's not funded properly, you could actually be putting yourself in a position where you can't do it. You won't be able to use it for your real estate deals or other things. And so, I always say you can have two life insurance agents representing the same company, representing the same products, and come up with two totally different scenarios. Because the outcome and the how their knowledge of how to do these things is different, right? And so just because someone says they understand it doesn't mean they quite fully understand it.
Thanks for clarifying that and adding the extra details. Some other things I'm thinking of too is I've seen over the years, because of the business I'm in, I've seen other products and different variations, but this one in particular just has so much more capability. And are we allowed to talk about that? I know I came up with the phrase conduit account. I don't know if that's legitimate or not, but the other component that we were discussing before, that's actually part of the whole offering, it really adds a whole new dimension. I mean, you talk about control, it gives you even more control over finances, even other residual income down the road. But are we allowed to talk about that part of it on a public podcast?
Well, I mean, yeah, because as a conduit, you're just using your money to just flow through, right? And so there's nothing really to that. And so again, just understanding the if we take the what we think we know about insurance, right? And this is the biggest challenge I have with people, is because they walk in and they think, oh, I know about insurance. Yes, you know about your grandfather's insurance. Let's go back. I like using that analogy. I'm going to keep going back to that, right? Because that's what they know. But the thing is I always talk about if I gave you a Snickers bar wrapped up in its original wrapper, and you like Snickers, you say, oh yeah, I want a Snickers, right? Because you see the wrapper and you know what's inside of it, and you've experienced a good thing with it, so you accept it. But if I gave you that same Snickers bar, but instead of giving it in its original wrapper, I gave it to you in a piece of a tinfoil that was all crumbly, and maybe it had a little black things on the outside of it, you may think, oh no, that's not a Snickers bar. No, I don't want it, because a wrapper is not what you're accustomed to, right? And so I always want people to understand that if we just took off the wrapper and actually looked at what was inside, I will tell you that the benefits we are looking for as investors, real estate investors, and all that, it's there, right? But we get caught up on the wrapper called life insurance, and so if we can just get past that, and understand that this is just a conduit, a way for us to just flow our money through, because it still gives us the end goal or the end benefits we want. But it gives us so much more freedom and so much more choices then our minds are open to receiving that information. Yeah,
I agree. I know when I first saw this, I mean, I'm of course I'm an eager learner, and it was definitely opened up my eyes to a whole new world I never even knew existed in the world of life insurance. So for example, for people listening to, one of the things I'm considering doing, and I'm going to do, is set up my own index universal life policy. Okay. I'm going to actually pre-fund it as much as I'm allowed to. Okay. So I have, more benefit more immediately, and the cash value begins to grow more rapidly. But also this conduit account, what I'll do is I'll put in there all of my income coming in, my personal income, right? Not the business income, but whatever comes to me from the businesses, I'm going to put in this account. Then out of that account, each month I withdraw what I need for my living expenses, electric bill, gas bill, water bill, that kind of stuff. Then there's money left over in that account that accumulates too. So, and also that you're using that to pay your the premiums on the policy. So after a period of time, it could be 15 years, could be 30 years, I've got another, bucket of money sitting there growing that could pay me, hundreds of thousands of dollars a year in retirement. It doesn't matter how old I am, I could be 30, I could be 60, and that benefit's available too. That's something I've never seen before. I don't know if it's a trade secret, but maybe it's not a secret now because I just told everybody. But that's one of the things I was telling you guys. I wanted really to have you listen to Leonard because I never saw that. I've seen that conduit philosophy before in other products that are non-insurance related. I've never seen it combined with life insurance, particularly index universal life that already has cash value, and already has death benefit. This is something that really is true and unique, and it puts you in control. So is there anything else about that, Leonard, that we should mention or say, things I might not be aware of myself? Because I know I'm just learning this myself, So.
Right. So the beautiful thing about this, right, is that life insurance, the actual the policy itself is not the wealth creator, right? What we do with real estate investing and other ways we allow our money to work, that's the wealth creator. What this is just the foundation, a place for you to basically take your whatever strategy you use, right? Whatever your goals are, it allows you to place it on on steroids, right? Because it's going to, now your money is effectively working in 2 different places, 3 different places at the same time. And when you allow your money to work in multiple places and each location is earning its own money, you're just creating multiple, what is the word I'm looking for? Multiple profit centers, right? Yes. So that your money is then not growing by addition, it's actually growing by multiplication. Mm-hmm. And ideally, this is what we're trying to do, because in the long run, like you alluded to it, we want to create the tax-free retirement income, and that's really what everything that I teach is about, tax-free retirement, because we all know, right, that the taxes are going to go up. It has to go up with everything that's going on. And so knowing that, it's how do you hedge against that tax inflation? Well, that's what we're essentially doing here.
Yeah. And that's such a huge benefit. And we'll talk more about that too. But just to put context here, everyone, and I'm not knocking our government. Maybe I am, but I'm not trying to politicize this. I'm just telling you, this is what's happening in Washington, D.C. today. All right. Number one is they want to raise our capital gains from 15 to 39%. Okay. That's a 24% increase on a scale of 1 to 100. But if you look at the real hard math of it, 15 to 39% is nearly tripling the capital gains burden. Okay. Another thing they want to do is they want to eliminate 1031 exchange for anything over 500,000. That's a big deal. And the third thing is they want to meddle with our IRAs. If you have an IRA, boy, get ready, because they're licking their chops. And I don't care what your political affiliation is that is not good news. So here you got this other vehicle for you to use to grow wealth and income in a tax sheltered way. Just unbelievable. So that'll really think about current events and what we're showing you here makes available to you, and how you can counter that current events with this one product. So now within the would you mind, Leonard, kind of, I mentioned the terms whole life, universal life, and index universal life. Would you mind giving a brief description of, what the difference is between the three? I know whole life probably goes back hundreds of years as the original one, I'm guessing,
Yes. Yeah. So whole life, it is the original, and it is a great product, right? The pros and cons of whole life is that with a whole life, you get guarantees, and guarantees are important. But one thing you got to understand about guarantees is guarantees come with a cost, right? If your roof had a leak and you called a roofer in, and he gives you an estimate, and you ask him, hey, well, I need a 20-year warranty on this. Well, he's going to have to, put some cost in there, because he knows he's probably going to come back. So same thing with a whole life product. It's a great product. Don't get me wrong. It's just because of its cost basis, it makes it hard. There's like a drag on your money. Okay, so you can still create tax-free income. You can still make these strategies work, but it just slows your growth rate down, right? A universal life policy. Again, this is probably of the three my least favorite, only because of the risk factor. One thing I teach is you do not need to take unnecessary risks. Okay, and with a universal life policy, because your money is invested in directly in the stock market, when the stock market crashes, you have the possibility of losing money, which is not a good thing. And so what the index universal life did, and it took me a little while to understand this, because the indexing portion removes the risk. Right. So it allows you, we have what is called caps or ceilings and floors. And it's just that, a ceiling, your money is still invested in the stock market. So when the stock market does well, you participate. But if it does really well, then you're going to get stopped out at some point, because of the insurance company, that's some of their protection. So they cap you out at a certain point. But what's beautiful is that when the stock market crashes, because it has a floor, it prevents you from losing money. Okay. And so it gives the average person the ability to participate when the market is good. And it takes away the risk of when the market doesn't do well. Right. But when you compare an IUL to a whole life, again, with an IUL, there are no guarantees. The only guarantee is that you're not going to lose money because of the 0% floor. But because the IUL is, there are no guarantees, and it's based off it's like having a term policy with a renewal. It's a renewable term that allows you to if funded properly, it speeds your growth up. It accelerates everything, and because we're not front loading all your costs, right? And so there's again, and this is why you need someone who understands the differences between a whole life and an IUL, because how you structure the policy makes a huge difference. So you can't, again, take two things and just blanket it and say, oh yeah, well they're the same. No, because what was the purpose of it? What was your goals? What were you trying to accomplish? What was a time frame that we were looking into? And so it's all these things. What riders do you add into it to accelerate certain things, and what riders do you take out of it? So so it's this internal knowledge of the different things of how you structure it, basically.
Yeah, well, I appreciate that. It's funny how, just like any industry, the sectors. There's new sectors that pop up in the industry. Industry is always evolving. All industries are. And this is the evolution of the life insurance industry. And that's why people should definitely take a look at it. If you haven't for a while, you should definitely take a look at it. And one of the things we touched on earlier, and I apologize, we should have spent more time there. The whole concept of, I guess you call it pre-funding, or if you have, windfall, or you just have some excess capital, there's a way you can deploy that with life insurance. But and I know there's rules about this, Leonard. I don't know what all they are. I know you mentioned this before, but what can you talk more about that ability to, instead of just starting off with a premium, actually start off with if you have a windfall, for example, what can you do with that, and how does that work with life insurance?
Oh yes, definitely. So when I talk about pre-funding a policy, and again, when I'm talking to real estate investors, right? Again, how do we put our money into a safer vehicle, but also giving us access to that money? So what we do is we'll add certain riders into it, and so when you pre-fund it, what you're talking about, Gary, is that there's a MEC limit, and we don't want to violate that MEC, because once we violate the MEC rule, we lose all taxable benefits inside of the policy, and the IRS comes after us pretty hard, right? So we want to make sure that we structure the policy in a way where we can bring this money in, and now it's going to be getting a better return, while not having to not having the risk attached to it. Okay. But then also, because it's liquid, we can then now use this money to then roll it right back out and either fund deals or get into our own deals or whatever the case is. But it's just a matter of changing the storage container, and that's all we're doing. We're moving it from an old clunky, rustied out storage unit, and moving it into the newer storage units you see out in town with AC units and 24-hour access and all that stuff, right? So all we're doing is putting it into a more efficient container.
Yeah. Well, I love the description. And there's other benefits too. I know in the past you generally had the death benefit, and then you have the cash value. And for everybody, just to kind of paint the context for you. So you may have heard from people, you don't want to commingle insurance with investing. And in the old days, maybe that was true, like with term life insurance. There was no connection there. But I will tell you, some of the most affluent people I've met, even back in those days, still had whole life, because a lot of times they own businesses, and they recognize if something happens to them, they become disabled or they unfortunately lose their life, a lot of times that business is going to suffer because that person who created it is no longer there. And they want to protect their family's lifestyle and their legacy. So they use the death benefit for that. But while they were alive, they were using a cash value to build more business, to buy more investment properties, things like that. So they really did. It wasn't like an idle thing or a passive thing or just a necessary evil. It was part of their strategy for wealth building. It's just now it's a lot more powerful. So within the things we've discussed already, Leonard, are there other potential benefits? Like, can someone utilize benefits of the life insurance policy now, even while they're still alive? Should they, get, disabled or something like that? Is there any can you shed some more light on that part of it?
Exactly. So thank you for that. Yeah. That so what you're alluding to is the medical living benefits. And so again, there's different policies out there, but some companies, in the event you get sick, right? And today, because of modern technology and modern medicine, we can suffer a heart attack and we're going to be fine. They're going to keep us alive, but our quality of life is going to take a hit. And how do we maintain our lifestyle that we work so hard for, right? I mean, that's the one thing in that we're always trying to do is create wealth so that, we can enjoy life. But then something unfortunate happens and we get sick. Then what happens? We no longer can do, we think we can go out and still do real estate investing. Well, there's added stress when you're doing that. The contractors doing what they're supposed to do. So you may not be able to be, 100% in the game. And so what these new policies allow you to do is access a portion of your death benefit today while you're still living. And this is why it's called medical living benefits. So there's different riders like terminal illness. If doctor says you got less than 2 years to live, we're going to give you a huge chunk of your money upfront lump sum, and it's tax free, right? And there's critical illness where there's, there's 13 qualifying events, and in some cases where heart attack, stroke, cancer, ALS, Lou Gehrig's, right? You'll get, up to 70-80% of your death benefit. Same with critical injury, coma, paralysis, severe burns, and brain trauma. And then the last one would be chronic illness. I mean, this is a scary one because if you can't perform any two of your 6 daily activities, which are eating, bathing, clothing, toileting, walking, transferring, what do you do? Because I can guarantee you're not going to be able to you won't be able to leave the house, right? And so, if you have some kind of family history that you need to be concerned about, or you have diabetes where it's a decaying disease where at some point it's going to take away your ability to do certain things, well, that's where these policies come in, and it gives you that one more layer of safety to know that if something does happen to me, I have access to this cash so that I can, one, either go get the medical care I need, or two, make sure that my lifestyle, my family's lifestyle, we're taken care of, and we don't have to worry about anything.
Yeah, that's so critically important. And I don't want to sound like I'm ready for retirement myself. I mean, I actually did retire 18 years ago from the corporate world, but being an entrepreneur, I mean, I just, we're all the same. We have the same genes flowing through our brains, and we just want to keep going because it's fun. But what you'll realize is if you live long enough, that life events are going to occur. You're going to have a car accident. You're going to have a divorce. You're going to, have, physical ailment or disability. I mean, all kinds of things. People every day, somebody's born, somebody dies, somebody gets a job, somebody loses a job. So it helps me become more realistic. About my expectations. Realize I'm not invincible. I'm a human being, and I have a physical body that doesn't last forever. So when you have this type of a policy and the right riders and everything goes along with it, it gives you a lot more peace of mind. And because we're all here about, building financial freedom and using real estate to help us do that, life insurance is an absolute, direct partner in that effort. Think of it as a business partner and a strategy to help you achieve your goals and your dreams. So you have to play offense, but you also got to play defense. And that's what I'm getting at here is having this allows you to play offense and defense, build what you want, right? And keep it through the right type of protection. So hopefully that makes sense to everybody. And Leonard, I know we're probably past where we should be, but such a vital subject. And I think we'll have you on again. I know you're going to be teaching a class for us here in about a month. I'm looking forward to that. But any final words you can think of, words of wisdom that people should know, or how about this? How about people that want to talk to you about this? How can they get a hold of you? Anything you can offer. I believe me, it's you can make a lot of friends by sharing, if you don't mind.
Awesome. Actually, before I do that, Gary, I did want to touch on one more thing because I know you said that dentists and doctors. I mean, if you think about this, right, they have a skill set that if for some reason something happens that takes their ability to, their ability to use their hands or their ability to, do certain things, well, now their career is completely over, right? And that's where these medical living benefits really come in, because again, we can ensure that in case something does happen, again, your life isn't over, right? But so that's the only thing I wanted to add into that. But the other thing is I would just go to LinkedIn. That's where I'm most visible. Leonard Cabral is where you would find me, and we can definitely just message and go back and forth and just let me know that you heard this podcast and you was introduced through this through Gary Wilson, and definitely that way I'll understand where you're coming from and where your mindset is. Because for me, I don't want to rehash everything if I don't have to. And so any type of connection of how much always helps me out, right? So that's the best place I would get connected. Yeah.
What's the best professional network there is?
Yes.
As far as encompassing all the industry. So everybody listen, that's Leonard Cabral. That's Leonard, first name Leonard, last name Cabral, Cabral. And you can find Leonard on LinkedIn. And I will tell you, if don't really do this a lot, but I take this as a personal endorsement. I've met Leonard at least 3 times now. He's not afraid to travel. So I met him in Pennsylvania. I had dinner with him in Pennsylvania twice, actually, and been on a couple of different Zoom calls. And I myself am participating in this product. In fact, I'm learning more about it and becoming a part of it. So that's how strongly I feel about this. Okay, you don't usually hear me say that a lot, so take
Awesome.
that. Yeah, and Leonard, I think I speak for a lot of people when I say thanks for being on and doing this. Again, I know I've observed how successful you are, and I know you're a busy person. So this was a great benefit for us, and I'm grateful for you to do that.
Of course, anything for you, Gary. Appreciate just you inviting me on this call. And I get excited every time I get an opportunity to share this information, because I think this is what people need to learn, right? And with your organization and you teaching people how to invest in real estate, and if we can combine the two, it just makes things that much stronger and better. So thank you, Gary.
You're very welcome. And for everybody listening, thanks again for listening. Please subscribe to the podcast on iTunes, iHeartRadio, Stitcher, whatever your favorite channel is. And again, go to the website, realestatewithgarywilson.com. On the homepage, you'll see there's 5 little books you can get for free. There's 5 10-page books, great little primers. But click on the members area. I'll give you a little secret here. Click on the members area. If you're already a member, you know where to go to get all the goodies. If you're not, go to the right. And it says, if you're not a member, click here. And you can get them free for 30 days and get the big books, the actual books themselves, on the subjects, 150, 200 pages for free. And, communicate with people for free, network with people for free, learn for free, tons and tons of information, tools you can use in analyzing properties, strategies, websites for research, all at your fingertips. Okay. And you'll also get to listen to this podcast here, because this will be on there. Leonard Cabral's podcast will be on the podcast tab, so you can replay that. Okay, everybody, take care of yourselves. God bless you and your families, and we'll see you on the next podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.